Hey everybody, Jeff Yastine here. Make sure to keep sending me your emails. You can send them to me at yastine.com, and of course you can always post the comments in the section below this video, and of course follow me on Twitter and on Facebook. So I wanted to talk to you today about a stock and group of stocks that I know is a favorite among many people, especially if you're a Robinhooder, which is the cruise line stocks. And so I wanted to direct your attention to the biggest cruise line of them all, Cruise Corporation, to put it more accurately, which is Carnival, CCL. And when I look at this chart, the one thing I'll say is I was bullish on the cruise lines and on Carnival from basically August until I put out another video in, that was late November, November 26, when I said it's time to sell the cruise line stocks as well as airline stocks. Now I won't get into airlines at this point. I'll just keep it limited to cruise lines. But I said in late November, time to sell these things. And around that time, or since then, really, the cruise stocks have just gone sideways. They're basically the same level. My concern here at this point is that I expect that cruise stocks will just continue to drift off lower. I don't expect, a huge plunge, but I just don't expect that they're going to really get their mojo back and get any momentum higher. And the reason why is because of the news from the company today, which is Monday the 11th. The companies, all public companies, like to reach out to Wall Street analysts, and they will give updates on where they see their business. And of course, that's very important these days because there's so much uncertainty regarding the timetable of coming out of the pandemic, with everything else that's sort of chaotic with vaccination rollouts and the delays there, et cetera, et cetera. So here's the point I want to direct your attention to. Carnival says unable to predict when the entire fleet will return to normal operations. So the pause in guest operation continues to have a material negative impact on all aspects of the company's business, including liquidity, financial position, and results of operations. Now, that sounds really bad, but the key to all this is sort of in the fine print of these sorts of announcements and discussions. The company says their average cash burn rate for the fourth quarter was $500 million. Further, in some of the other announcements made today, the company said that they finished the fourth quarter of last year with $9.5 billion in cash and cash equivalents. Now what that means is basically the company has this big kitty of cash, and of course all their ships are essentially mothballed, and every month that goes by they're burning another $500 million worth of that cash. And of course it's just a matter of how many months further can they keep their ships mothballed but ready to go, so that when there's enough vaccinations and enough worries about COVID that have dissipated, and of course we don't really know when that is, that hopefully Carnival is still ready to move quickly to get people on the ships and start earning money again. So that's the uncertainty regarding this whole setup, and that's why I think we're going to continue to see these stocks, Carnival and Royal Caribbean, to name the two, and I suppose Norwegian as well, to continue to just drift slowly lower until traders and until large Wall Street pension funds and the folks who are in a position to buy enough stock to start moving the shares higher again, until they feel like there's really a light at the end of the tunnel. And again, drawing your attention to a few other things here from last week, which is Carnival's Ida cruise subsidiary said they were pausing all cruises until the end of February. These are for ships that basically run out of the Canary Islands. Carnival also has its Holland America line, which also said last week they were pausing cruise operations through April 30th of this year. Then there's Carnival's Princess Cruise subsidiary, which also says they're extending their pause of guest cruise vacations in order to further prepare and develop their plans for conditional sailing with the approval of the CDC. The problem is they just don't know what the outcomes are at this point. So right now, Carnival's Princess Cruises is also pausing their ship sailings through basically the middle of May. That's the problem. That's the key that everybody, I think, needs to focus on. And the final point, and this is a good one, this is a good point for looking forward on Carnival. If you still own the shares, if you're not just kind of trading in and out of them, the key thing to focus on is, of course, vaccinations and where all that goes and how quickly vaccinations can be moved through the U.S. population, especially as we get a change in administrations and all that. So the other part I want to draw your attention to here, and these are actually good news elements to the story, which will move the stock somewhere else, down the road as this light at the tunnel eventually comes into view. But this headline here, which came out over a week ago, which is Carnival takes delivery of their new ship, the Mardi Gras. New ships are sort of like when they open new rides, new major rides at Disney World or Universal or Orlando. It's a major draw for not just new people who have never gone on a cruise before, but for all those veteran cruise vacationers. I'm one, and chances are you're one of them as well, who want to go on a new ship and get that new experience and be able to go home and say, hey, I got on the Mardi Gras. So look for the Mardi Gras to be a major draw, but it's not going to be now. It's going to be at some point, a month, 2 months, 3 months from now. We're just going to have to watch the stock to see when that turn happens. And so the last thing I want to point out to you, which also is a good news element, but it's something that's going to take a while to come out. And it's this headline right here. Micky Arison, who is the son of the founder of Carnival Cruise Lines, Ted Arison. Micky Arison, I've interviewed him in my past days as a financial journalist, down here in South Florida. Micky Arison, for a long time, the chairman and CEO also of Carnival Cruise Lines. So he lowers his stake from 17.5% to 13% of outstanding shares. The reason why that's important is it opens the door for what we call investment activists to come in and buy larger chunks of stock, and they will be able to get seats eventually on the board of directors and likely agitate for bigger structural changes in what Carnival Cruise Line looks like as a business enterprise. And often that means selling off underperforming divisions, may mean laying even more people off, mothballing more ships, but basically paring it down to something that will get the stock going in a bigger way, pay down Carnival's substantial debt that they took on to get through the pandemic, and basically get the stock in a position to move sustainably higher again. So if you're owning the stock, you've owned it for a long time, maybe before the pandemic, you don't want to sell. At this point, again, there's a significant burn rate, but the company has lots of liquidity. This, Micky Arison lowering his stake to 13%, is sort of an open door for investment activists to come in. And as they come in, at some point down the road, after the whole vaccination issue gets resolved and people feel a little more comfortable about owning cruise lines again, I would expect that this aspect of investment activists accumulating the stock will also be something that will help drive the shares higher somewhere over the horizon when there's better times ahead for the stock and for our overall view of the pandemic. If you like what I'm talking about, make sure to continue to follow me on Twitter and Facebook, and write to me at jeff@yastine.com.